Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Paul Noble, CEO of Chetwood Bank. Paul, welcome to the show.
Thank you, Paul, and thank you for the invite. Well, great to be here.
Excellent. It's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and Chetwood Bank then?
Certainly. So I started off for a 30-year or close to 30-year career across financial services. I've covered everything from large banks through to new fintech startups and private equity. So fairly broad coverage in terms of experience there. I joined Chetwood towards the end of last year, back in September. For those that don't know, Chetwood Bank, one of the challenger banks set up in 2016 and is fast growing and a great place to be.
Excellent. Sounds great. And again, it's great to have you here. And thanks so much for taking the time out to speak with us today. On the show this week, we'll be exploring Chetwood's product and tech innovation strategy as the Wrexham-based bank looks to continue its growth trajectory, having reached the milestone of £4 billion in total customer savings deposits earlier this year. We'll dive into how the bank is looking to stand out from the digital banking crowd with its no-nonsense banking approach, the key challenges for digital banks trying to scale in the current climate, how customer savings habits have evolved in recent times, and what new products and services are next in the pipeline for Chetwood. So to start off then, Paul, as you mentioned there, you're rapidly approaching your first full year in the top job at Chetwood. How have these first 10 months been for you?
Well, so coming up to 10 months in role, and how's it been? Well, it's fast-paced. Time has definitely flown by, and it doesn't seem like I've been here 10 months at all. As with many roles, when you join, I took the time out initially to listen and learn across the business, talking with colleagues, understanding what they're doing, how they are supporting our customers and brokers across the marketplace in what we do. Spend some time equally well with our distribution partners, very keen to understand what it is our borrowers are looking for and how we can best interact. I've got to say, on reflection, I've been very impressed. There's a huge level of passion for the business, very focused around where the business direction is going. And the colleagues across the team are very creative, very adaptable to change. And they've seen a great opportunity, which we're now following. There's real momentum, great potential for the business. And that's all coming together, I think, in terms of where we are today and some of the results that you've already talked about there, Paul.
Excellent. Sounds great. And I mentioned briefly in the intro, then Chetwood says it's a digital bank dedicated to getting the basics right through a no-nonsense approach designed for real people and their real lives. So what is it that Chetwood does differently to other digital banks, would you say, in terms of the products and services that you provide?
I think you touched on the answer within some of the question. It is about no nonsense. We are keen to get those basics right. And to do that, that's across our savings and our mortgage propositions. We have taken the time, we've really wanted to understand what the customer's real needs are. How can we serve those real customers and meet that set of needs that they're sharing with us? As we looked across it, we've looked at what the products we're offering are. How do we make them fair? How do we make them transparent? How do we make them easy? And easy sort of covers off multiple aspects there. It's easy for those customers to understand. How do we make it really easy for them to access in the way they want to access? And that really within the overall interaction with us, how do we keep that as simple and straightforward as possible? So I think as I sort of summarize, how do we make ourselves different to other banks? We're focusing on digital, but at the same time, we're doing it with what customers are telling us they would like to do in interaction. We're certainly not building out broad digital capabilities that go above and beyond the core banking capability today. We are focusing that digital capability exactly on meeting that set of needs. That goes broader for us as well. The other piece we're really focusing on is how do we make that no-nonsense banking come to life for our distribution partners across mortgages. So we really are focused around giving them platforms and access and capability that make their lives a lot simpler as well.
And the UK has embraced digital banking and there's a lot of players out there vying for market share. How have you looked to approach your strategy there to stand out from the crowd and effectively compete with not only the new digital native neobanks, but also established institutions and the larger budgets that they have?
When we look at our approach, how we position ourselves in that market, as you say, it is crowded, but at the same time, there are a number of banks offering different propositions to customers across that sector. So we've taken the time, we've stepped back and actually listened. I touched on it in what I've been doing for the first 10 months in role, and it's really important for us. We've listened to brokers. We spent a lot of time with them as we built out the mortgage proposition across motor mortgages and CHL to really understand what is it they need as brokers. How can they interact with us? What is it the borrowers that they're interacting with? What do they need? What is it they're struggling with? How can we overcome those struggles and how can we meet their need? Alongside that, we know what we are and we know what we want to be. I'm keeping that very narrow and very focused. We've honed in that we're not offering a very broad range of banking services. We are focused on delivering a great savings proposition for our customers. We're focusing around delivering that specialist mortgage capability that we will be recognised as the go-to specialist mortgage lender in the UK. And by getting those core strengths right, we're able to then, in due course, stand out from that peer group across that crowded market. As we look broader, we're not tech focused. And I say that in a way that says we're not tech obsessed. Yeah, technology for us is an enabler. It's not the driver behind what we're operating on. We are building out right now new capabilities using off-the-shelf solutions where appropriate. We're not looking for that proprietary build and development capability. We want that where it can provide that unique specialist experience above and beyond what we can get off the shelf. But we're not looking to rebuild the basics. So we're using that, and then we can deliver what we promise by actually, as I said, putting that top layer and architecture around it. So we will deliver what we promise. We'll do it in a very simple, in a very transparent way. And that's how we win in the trust. And that trust is becoming really apparent. You talk to the growth we've seen in our savings customer base, and that continues month on month. The feedback we're getting from those customers is absolutely amazing. That shows their trust in us. And for us, that's really critical. We've got that real privilege of being able to hold on to their savings and helping their savings grow. And that's what we want to continue to win more and more trust across the UK market with.
Excellent. We'll dive into the savings and mortgages offering shortly, but I wanted to get your thoughts on what the main challenges are for a digital bank trying to scale in the current economic climate. And in what ways have you looked to adapt to ensure your continued growth there?
It's certainly worth reflecting on the macroeconomic conditions we're starting in. And it's tough. As we look across the environment that all banks are operating in today, and I know that those conditions that our customers, whether they're borrowers or savers, are facing, inflation continues to be above the desired levels across the country. That's making consumers cautious, and that touches at every touch point of our products and our offerings. Savers are looking for security. They're not too sure what the macroeconomic conditions are going to do and whether it's a short-term or a longer-term product offering they're seeking. At the same time, we've got rate volatility in the marketplace. If we're looking at where the swap rates have moved over the last year, it's very, very difficult on that basis to get stability. And without that stability, we're trying to do the best we can for our customers to provide some support, transparency, and really explain what it means to them in terms of either their savings or their borrowing. So that's what sets the scene that says it's a difficult marketplace we're operating in, but therefore it does put the focus on us in terms of how we can help and how we can provide that clarity. For us, how we're adapting, we're focusing around doing it in a smarter way. We are looking at our costs. We want to be cost disciplined and cost optimization. So this is about making sure that where we are spending money, we're putting it to the best use we possibly can. We want to have a good return in terms of what that customer engagement and loyalty looks like on the return of that. And ultimately, that's helping us drive out that business plan that we've touched on, and I'm sure we'll speak further on. It's a clear focus as well. Across the team, we want to make sure that every member at Chetwood is really clear about where we're heading and why we're heading there and what part they play. And that's really critical. So we've got 300 people across the Chetwood Bank that are all focused, all aligned, and all driving towards that same set of goals. And that then comes through to sustainability, really critical one for us. We have reached profitability at the tail end of last year, and we continued that on a month-by-month basis. So that's really critical for us as a bank, sustainable, profitable activity through our core channels. We continue to focus. We're not rushing in terms of that diversification away from what we've got working well. We're going to continue growing that and working with our partners to make it successful for them.
Excellent. And you rebranded from Chetwood Financial Services to Chetwood Bank as well last year. How much of an impact has that had on your growth?
The first thing we'll say is the Chetwood Financial is the legal entity name and what the business operated under a group of brands previously. To move to a branding under the umbrella of Chetwood Bank is more than just a name. For us, it's a fresh, new, unified vision of what the business is. We need to be proud that we're a bank, and we want customers to know that we're a bank. I touched on earlier that the importance of being a bank is that privilege that we have, that customers are trusting us to look after their deposits that they have, their hard-earned deposits. It's our privilege to be able to support them with that. And that's really sort of at the heart of what Chetwood Bank as a rebranding activity has been about. We've got great products underneath that, but they just weren't enough. Yeah, we were operating under Better Borrow, Smart Save. Some of those are very well recognized in the market. But to us, to get that operating under a bigger umbrella of Chetwood Bank, really important. For us internally, it's actually created a large amount of clarity and pride. It's the next step in the journey of Chetwood as it's moved through different product offerings and different approaches in the past to where we are today. And we've not lost that history and the roots of what we've been building. That's still there. But what we are definitely doing is it's boosting our awareness across the marketplace. It's showing exactly who we are, who we serve, and how we do it. And I think for us, as we look at it today, it's providing a really solid experience by which we can continue to add to that for our customers and partners in the future.
Yeah, and you mentioned earlier that you see technology as an enabler for the bank. Given the wave of new tech developments, how difficult is it to choose an area to focus on, and what technologies or UX enhancements would you say are the most important to be focusing on at the moment to meet the shifting needs and demands of customers, and how have you looked to approach that?
It's a really good question, Paul, and I could be a bit controversial. I think sometimes challenger banks can be very technology obsessed. As I say, from my past experience, I've worked in startups, challenger banks, and established banks. And I think everyone is focused around innovation. We all listen to customers. Particularly at Chetwood, we're spending a lot of time listening to our customers and our brokers to understand what they need. We're talking to our colleagues continuously to make sure that the tech experience that they experience is the best we can make it for them. But we're doing it with that innovation for innovation's purpose, rather than just continue to build new technology capability because it's new technology capability. So the approach we are taking, we're continuing to talk about the Chetwood brand operating as a simple proposition for everybody. And on that basis, we don't need a complex technology stack. We are paring back a number of the complexities that we've built over time and keeping it very focused around actually what does that technology do today for our customers, our partners, and our colleagues. We believe that the partnerships we're building with a number of the technology providers that provide a broad range of capabilities off the shelf that we can then customize to make it fit for our purpose is working very well for us. I think the other piece that we're doing on a digital basis is we are digital native. We are still a relatively new organization and we don't have the legacy challenges that many incumbents would have. So we've definitely built our technology around a framework which says we can plug and play what we need to, but we don't do it for the sake of innovation. We are purely doing it because actually it's what we know is the right step for us to stay focused. We'll come back. What makes this change or this technology enhancement better and easier for our customers and our brokers to operate with? We want to be simple. We want to be faster. It's the speed that helps us win. Whether it's a customer going through an onboarding journey to be able to open up a new deposit account with us, how do we keep that automated? How do we keep that process as smooth as possible? But at the same time, that isn't purely about the technology. It's about the language, the process, the less faffing around that customers have to go and do. How can we actually just keep that to deliver what they need, what they expect from us, all at the same time recognizing they are trusting us with their money. And therefore, in return, they are expecting a degree of security and enablement that we can provide. So we're bringing everything together right now. I think we've spent a fair bit of time where we have been operating under multiple customer-facing brands to simplify that approach. We're bringing a technology stack so it operates on one platform. Data is critical for us in this. We want that visibility with a data-led platform that we can understand what is happening at every touch point. How can we continue that journey of simplification, enhancing our speed and enhancing our offering to our customers and brokers? I guess the final point for that on technology and innovation, we're not trying to be at the front of the pack. That's not our position. We are listening to what our customers care about. If they're asking for something, we will find the right way and the best way to deliver it for them. And sometimes that is leveraging some of the fresher technology capabilities we can access. Often it's not. It's a case of enhancing what we've got or even leveraging some core existing capability and just doing it better, simpler, faster.
Excellent. And is there anything you're working on right now that you can tell us about?
A good example I can give you on that, Paul, is actually almost where we come from, which is the launch of modem mortgages. We have built that as a technology-first solution that actually helps our brokers. So when I say that, what we've actually done is map out exactly what is the optimal process for which we can help the brokers put through an application and get a very quick decision as to our ability to support with an application and whether we can lend to their customer. With that, again, it's about how can we automate the workflows, the processes that take it through that journey. So we don't want a mortgage application for customers going through our specialist mortgage product offering to be taking weeks and effectively going back to the very traditional days, which everyone knows, when you've got paper moving around an organization. We have built it to be digitally led in terms of how we can deliver that. but at the same time, making sure we still have the appropriate level of human interaction that we can actually help nurture customer relationships, broker relationships, and interject within that journey to make sure we're delivering the right outcome for everybody involved.
Yeah, and I mentioned at the start of the show that you reached the milestone of £4 billion in total customer savings deposits earlier this year. And as you've mentioned as well, savings rates in particular have been a hot topic in banking recently, given the fluctuation with interest rates in recent years. What would you attribute your success to there, and what trends have you been seeing in terms of the evolution of customer saving habits?
From a Chetwood perspective, this is going back to no nonsense banking, and that is clearly resonating with existing customers and many new customers that we are having the privilege of onboarding every single month. We've recently reached a £5 billion balance sheet across the bank, and that shows some of our rapid growth. And that demonstrates to me exactly where customers are trusting us as a brand and a business. We're a great place to trust, to leave their money with, and watch it grow. We are equally on the mortgage side, fast pace for us is key there. We are reacting very quickly to what we're seeing in the marketplace, what we're hearing from our borrowers and what we're hearing from brokers. And we're making changes to reflect that on a week by week basis. Yeah, we're supporting across the broader market as well. So whilst we are originating our own mortgages, today we're specializing across the buy-to-let sector. We've got a number of arrangements in place with other lenders where we're operating on a forward flow basis. So we're acquiring new lending, which they're originating each day. And that alone has got us to over 3 billion in that over the last couple of years. So we are rapidly growing in a safe way. We're getting great customer feedback in every touch point we do. And we'll continue to use that feedback to continue to iterate what we're doing. So we are back to that no nonsense, simple, faster, better approach from what we're doing. From a savings growth perspective, we launched under the Chetwood brand with an easy access product back in October last year, and that's been proving very successful. It was great customer uptake on that, clearly demonstrating there's a need that the customer is expressing, which we're stepping in to try to meet. We've expanded that further with a whole range of fixed term deposit accounts and more recently notice deposit accounts as well. So we're continuing to evolve that proposition, which we have to meet those needs. We know people want flexibility. Yeah, we know back to one of our earlier points in this conversation around the macroeconomic challenges which we're all facing. We recognize the impact that's having on our customers and their uncertainty. So we are developing products and propositions that will actually help them match their need of how they can tackle their savings in that market, which has volatility, uncertainty, and giving them the support flexibility they want. So I think for me, that success of how we've reached those numbers we've been talking about, it's doing the basics consistently, doing it well. And as soon as we're identifying either opportunity to enhance what we're doing to meet customer needs, or we're eradicating things that are causing frustrations in the process, we're tackling that straight away.
Excellent. Yeah. And there's been a surge in account switching in general from consumers recently, with people who switch off and citing new joiner incentives or better savings rates as reasons for switching. I mean, banks always used to be quite sticky when it came to customer retention, but do you think people are more willing to change their bank now and seek better deals elsewhere?
So from a Chetwood perspective, we are offering deposit accounts which are not transactional based. So we're not offering the current accounts. Our focus is ensuring we are offering good value savings products for our existing and new customers. Yeah, you saw from my previous response in terms of our growth and our ability, that's definitely coming across and resonating with customers today. We are seeing savers across the board of different ages, of different backgrounds, of different values of deposit books they're looking to save, all looking for a better, more appropriate for them provider in terms of that savings product. And we're not positioning ourselves as one size fits all. We're not expecting equally to have a proposition that's going to meet everyone's need. That's far too broad. So what we are doing is we are specializing in providing a great proposition to those savers where we can offer the right value for them and what they're trying to achieve. It's not just about rates with that. Rates are clearly important. That is what customers are looking at. We know that. So we are making sure that the rates we offer are fair and they are competitive in the marketplace. But it's about the right product fit. So we've got customers that are taking out fixed term deposits because it's the right one for them. They know they can put their savings away for a period of time. Equally, we know we have customers that want to get a slightly better rate than they perhaps could on an instant access account, but do want some ability to get hold of that in 3, 6, 9 months' time. So we're providing that flexibility again for customers because that's what we're hearing from them they need. And this comes back to clarity. We've built Chetwood Bank to be jargon free. We're trying to talk to customers in simple terms that they understand day to day. And that makes it easy for them to switch to us because it's easy to understand. There's nothing hidden, very transparent. And for us, that's definitely coming through day to day and what we're hearing and what we're seeing customers respond to us with.
Excellent. And you mentioned Moda mortgages earlier as well. Can you tell us a little bit more about the mortgage strategy that you've got there and how you're looking to grow that side of the business?
Absolutely. And that's a really exciting part of the business for us right now, Paul. So we've got two different mortgage brands. We've got Moda Mortgages and we have CHL Mortgages for Intermediary. So a bit of background on each of them for you. So we launched Moda Mortgages back in January this year on a national launch basis. But for us, it is a new home for smarter, faster, simpler buy-to-let mortgages. We've got a really clear focus with that brand and that proposition on supporting intermediaries with quick and easy access to us as a lender. And that comes through from a response to initial inquiries all the way through the application journey with their customers. And we can talk a bit more about that in a second. From a CHL mortgages perspective, we had an established relationship with CHL, and the opportunity came to deepen that and acquire the business from an intermediaries acquisition perspective. That was clear cut for us. That was a great lending business, very well regarded across the industry as a specialist lender who has the expertise to handle complex cases that other lenders and some automated systems would naturally shy away from. So we've therefore got these two businesses operating in the specialist mortgage sector, which have two distinct and very specialist purposes in terms of how we're helping the intermediary network, but also borrowers. So one end of the spectrum, we've got Moda Mortgages, faster, simpler, smarter, it's automated, it's really quick and easy, and it's far more down that digitally led automated route as much as we possibly can do it. The other end of the spectrum, we move towards CHL, and we can actually really help intermediaries that have cases that just don't go through that straight through process. It could be that the property has more challenges in terms of a lender understanding what that looks like. We have customers that have more complex income approaches, which we need to take more time to understand and work with the broker and the potential borrower. So by putting these two side by side, actually, we've now got the ability that on a unified basis with our sales team, we can talk to intermediaries and we can cover a very broad range of that buy-to-let market today. And that's really important for us. So we've now got both brands operating under a Chetwood Bank umbrella with a unified sales team. So we're supporting brokers with a very broad range of applications. And it's double the opportunity for our business development managers in their day-to-day interactions with the brokers to help them place their case with the new lender. I think our strategy is fairly simple on those two mortgage businesses. We want to lend. We're here to lend. And we want to make sure that we give brokers and customers and borrowers the right ability to tap into those businesses, their lending strategies, and keeping it as simple as we possibly can. I think the other piece that's then worth touching on is what does that mean we can do in the future? I said at the very beginning of our discussion that we are really focused around becoming the go-to specialist lender, specialist mortgage lender in this marketplace. And to do that, we recognize we need a broader proposition than we have today. So we are diversifying into other specialist finance markets within that mortgage arena, and we'll continue to do that. Today, we're broadening out that category, but in the coming months, we'll also be moving into adjacent product offerings as well.
Yeah, well, you kind of touched on my final question there, but what would be next for Chetwood in general in terms of the near-term future, maybe on the savings side of things as well? But is there anything else in the pipeline now you can tell us about?
When we look at the mortgage side, we are in the process of bringing to market a new mortgage proposition. I can't share too much about that right now. Watch this space, and hopefully we can come back and tell you more about it in a 2 or 3 months' time, Paul. But we have some great mortgage products we are bringing to market, which will be a further diversification of what we can offer today. From a saving perspective, we are continuing to add month-on-month broader range of product offerings to our customers. I mentioned earlier, we've launched the fixed rate product, and we've now got term notice products, and we have more of those in the pipeline, which are being built by our technology team right now, so that they will be coming in the weeks to come. We will continue to do that. There's lots of opportunity, and this is all based on that feedback from talking to customers, talking to our brokers, working with the intermediary network to understand what do they need, what is it they feel we can actually provide that support with, and on the back of that, we're building up that diversification capability.
Thanks again, Paul, for chatting with us today. To close out the podcast, we have our now infamous FinTech jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
So, Paul, I've got a new buzzword or buzz term that I'd like to see get locked away, and that's next-gen banking. It's regularly talked about, regularly seen in articles, but very rarely defined from my perspective. It sounds a bit science fiction-y. And unfortunately, as one of those people that have worked in this industry for nearly 30 years, I think the whole conversation next-gen banking is misaligned. We've got customers that continue to change their needs and evolve over time, and that's across different generations of our customer base. We've got different capabilities coming to market, but we continue to evolve. And I think this concept of next-gen banking almost seems like there's something radically new around the corner. And I think if I look back over 30 years of being here or helping to develop this industry, we continue to do it day to day. And there's no big bang coming around the corner. So from my perspective, I'd love to see next-gen banking get thrown in that jail.
Yeah, sounds good. I think, like you say, it is lacking a bit of definition when it comes to what it actually means. And like you say, banking is in a state of constant evolution. And for something to be truly next gen, it needs to completely upend the industry and how people bank. So I'm more than happy to add this to the jail this week. Before we finish, though, I mean, for you personally, what does the future of banking look like?
For me, this is very simple. It's understanding customer need, customer demand, and how we can make that simple for them. It's about giving them the right products at the right time in the right way that operates for them. And don't make this too complicated. I think there's far too often we try to get really complicated in terms of we can see great opportunity to develop technology capability, but it doesn't mean customers need or want that. And ultimately that could increase the cost of what we're providing to those customers. So let's keep it focused. Let's keep it streamlined. Let's talk to customers in simple language they understand and just do the basics right. And if we can do that, I'm confident we'll have an industry which customers across the UK will be very proud of participating in.
Excellent. Well, yeah, sounds good to me. Like I say, I'm more than happy to add next gen to the jail this week then. And we'll see you later down the line if anybody wants to come on the show to break it back out again. But for now, Paul, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you for your time.
Well, that's all we have time for this week. Thanks, of course, to Paul for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest FinTech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favourite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.